Hi all, Joshua Steger here from etfadvisor.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. I'm going to cover off on three key things this week. Number one, I'm going to look at the US market and why it may be indicating the correction's starting, and some key data that we can look at under the surface. Number two, I'm going to look at resources and why they're acting right at the moment and what that may mean for the Aussie market. And number three, why this week could be a really big week for Asia, and in particular Asia Tech. So we're watching that quite closely. I also just wanted to say thank you for everyone who's followed me on YouTube. So we're finally over 100 subscribers. So thanks for following. If there's anything that you're interested in, if I'm not covering or you want more detail on, feel free to leave some notes in the comments section below the videos. And I certainly read them and take them on board. So certainly, add any feedback there. And also remember that you can access a free 30-day trial to my full subscription email service. Just follow the show notes. You can see it here. Click through. It'll take you to a Google form where you can sign up and get a free 30-day trial. So let's get started on the market. So we'll start with the S&P index here. So there's an S&P 500 in the US. And you can see it's really quite close to highs. So you had that initial sell down, and then last week was actually pretty strong. And that's in the middle of reporting season as well, which is a pretty good sign. The NASDAQ actually looks a bit better and very close to all-time highs again. So you see that at 2 days of selling and then pretty much back-to-back buying all last week. But let's just take a look under the surface and why, a correction, it may be indicating the correction is underway, even though the indexes are still, well, certainly the S&P 500 and the NASDAQ are still near highs. So here's the first piece of data. So just on this chart, we've got down the bottom, we've got the S&P 500 index. So there's your tariff correction, there's your kind of V-shaped rebound, and that's pretty much where we are now. And then in these data points above, we've got the S&P 500 stocks above the 20-day moving average, S&P 500 stocks above the 50-day moving average, and the S&P 500 stocks above the 200-day moving average. So it kind of gives you an indication of where those kind of 500 stocks that make up that index, where they are, within their own share price moves. And certainly, it's positive if you have your stock above the 200-day moving average, above the 50-day moving average, above the 20-day moving average. That indicates that it's uptrending. Once it starts getting below the 20-day, that's the first sign that potentially, that stock is starting to downtrend. Once it's below the 50-day, it's certainly downtrending, and once it's below the 200-day, as I say, nothing good happens under the 200-day moving average. So once your stock's under the 200-day moving average, it's well and truly in a correction and really in no man's land. So this kind of data gives us an idea of what's happening, as I said, within those 500 stocks that make up the S&P 500. And what is happening at the moment, we've got a bit of a deterioration in the participation. So you can see here, we're very close to all-time highs, and that's where we closed on Friday. And you can see this is basically where these indicators are at the moment. They're certainly not near previous highs. So the highs there for stocks above the 20-day moving average was back in July. Same for the 50-day, and for the 200, it was probably late July. And since then, you've kind of already got stocks starting to correct. And the other indicator there, that it may be that the breadth is deteriorating, which means fewer and fewer stocks are participating in the upward move. And this is a bit of an indicator that starts to tell you that below the surface, so we've got the index near highs, but below the surface, a lot of stocks already starting to sell off. So if we go back to, let's have a look at a historical data point, and you can kind of see, certainly just recently, this was the tariff correction, but you could see that the breadth in the participation was really starting to weaken. It was probably strongest right at the start of the year in January, December, January, and then kind of just weakened off and just got weaker through that correction. So it was giving us kind of, it's almost like 2 months, 2 or 3 months kind of indication that things were a little bit weak before the market actually started to sell off. So this is, a bit of a concerning sign when you've got that breadth start to deteriorate. As I said, it's showing that stocks under the surface are starting to correct, and it may mean that there's some big stocks in the S&P 500 that are holding up the market, but below the surface, it may be like 5 of the largest stocks in the S&P 500 are holding up the market, and the rest of the 495 stocks are correcting. And it's very rare that those big stocks are going to continue to hold things up. So that's something to keep in mind. So we're just watching this at the moment. It popped up a little bit at the end of the week, but if that continues to deteriorate, that's certainly a warning sign that a correction is underway. Another thing that I covered off on this week in the email, and I just wanted to show this chart as well, you kind of see where the participation is at the moment. So here's the S&P in purple, and you can see that, it's pretty positive. It's still trending up. There's your NASDAQ, which is stronger, and that's in yellow, and that's popped up as well. So where the real driver of the market is at the moment is in kind of those magnificent 7 tech stocks, and you can see how strong they've been, and that's kind of since just in the last week or so, they've kind of moved into new highs there, and obviously they've been the big performer over the last 1 year as well, just in terms of these figures. But if we have a look at some of these other sectors, so we've got here we've got the Dow Jones index. That's kind of, it's not as broad as the S&P 500 and the NASDAQ. You can see the Dow Jones is already starting to weaken, so that's in orange. Here you've got small banks, KRE index, that's weakening. You've got the financials index, that's weakening as well. Industrials, XLI, weakening. And then here you've also got a tech, so this is kind of a broad tech index as well, and that's actually weakening as well. So it's interesting. So, and obviously these Mag 7 stocks are massive. They're a big part of the index, and that may be distorting things. So they're running, the NASDAQ looks like it's running, the S&P looks like it's running, but below the surface, there's a lot of these other sectors that are weakening, and the Dow Jones as well, which is a bit of a stalwart for, they're the really top 30 big companies in the US. So there's some divergence and reason to be concerned at the moment. So that IGV as well actually has, so this is iShares, this is IGV, iShares Expanded Tech Software Sector ETF. So even tech, and this is quite broad in terms of what it holds. Its biggest holding is Palantir, which is actually at highs, but then you've got Oracle, Microsoft, CRM. So it's actually quite broad. I mean, 11%, 10%, and then the rest are kind of, in terms of allocation, a bit smaller, but it's big name tech companies. And as I said, back on this chart, you can see IGV actually weakening as well, which is a bit of a concern, and saying that it's just the Mag 7 that are kind of holding up the market at the moment. And as I said, that could really be distorting things. So that's something to keep in mind, and we'll certainly be watching the S&P 500, the NASDAQ this week. You can also see the small caps. So this is the Russell 2000 in the US, which is a kind of 2,000 small cap stocks. And you can see that had the correction bounce, but it's kind of, it's certainly not as strong as the S&P 500 and the NASDAQ. So that's something to keep in mind this week. I'm certainly looking for a correction. I think it's a matter of when, not if. And it's just, we have to be a little bit cautious here, particularly given the run in, well, certainly in NASDAQ and S&Ps from that kind of tariff correction. And obviously now we've got tariffs in the news again. Obviously war continues to be a news item, and just global uncertainty in general. So that's something to keep in mind, and that's something we'll be watching closely for our subscribers. The other thing I wanted to cover off as well this week, so we'll just quickly look at the ASX 200 index, and you can see it actually looks quite strong. So we had that kind of bit of a sell-off, and then this week it kind of pushed into new highs and then finished the last 3 days pretty flat. But the real driver of that has been those resources, and that's something we've been talking about. So I'll just go back. So this was the 10th of August email to subscribers, and one thing that we were looking at, we've been quite interested in resources just because they've kind of been on the nose for quite some time, but they're actually the charts and just the whole economic environment and global environment is starting to improve for resources. But just in terms of what we were looking at, so just in here we've got the MVR. So this is kind of the broad index of resources. So it has BHP and Rio, but then it has quite a lot of other smaller and mid cap resource stocks. So it's a really good indicator for that kind of broad resource market in Australia. And you can see here on the weekly chart that actually looks really constructive. Tried to push out, sold in last week and found support. So this is the 20-day moving average. This is the 50-day, and it's kind of like at a perfect point. It found support, and then this week it's pushed pretty much back to those previous highs. That was really strong. And there are another couple of ETFs that we had our eye on for subscribers, and we touched base on certainly touched on these in that 10th of August email. And you can see XMET was one of the ones that we were really quite interested in. So this was 2 weeks ago. You could see where when it first pushed out, but it just looked really strong, and particularly on the weekly chart that it's kind of stretched a bit there. So we're looking for that pullback, and it was just a matter of where it would get supported. So last week, that's pretty much where we were. And then this week, we have another look at the chart, and you can see it found support perfectly, just like the MVR at that 20-day moving average, and pretty much pushed back into highs. Same with GMTL. So these are green, like XMET, GMTL, ACDC, kind of in those critical minerals and green energy minerals. So they're kind of the key sectors that are moving at the moment. And it's exactly the same thing happened to GMTL. Pushed out. We're expecting that pullback, and that's what we wrote to subscribers 2 weeks ago. Last week, that's pretty much where we were at. And now this week, you can see just a reflection of where that's come to this week. Hit that 20-day moving average and basically push back into highs. Same thing with ACDC. Had that push out, expecting a pullback. Where was it going to get supported? Got supported at that 20-day moving average, which is really showing that strength. And then this week, it's pretty much back at highs as well. So this is in the email that we provided, that we sent out to subscribers today, just covering what we've been talking about and why those resources are really acting quite well at the moment, even considering the fact that, as I said, the US market looks like it could be weakening. So that is what's kind of driving the Aussie market at the moment. So you can see, as I said, the ASX 200 is quite strong and kind of near highs there. But what has actually been really even more surprising is kind of the small caps. So here you've got, well, actually a better one would be ISO, better one to look at, and that's actually been a lot stronger. So this is small ordinaries ETF, and you can see this is then going to be made up of, whereas the Aussie ASX 200 market had really been running on the big cap stocks, a lot like what we've seen in the US and in particular in Australia, being financials and a few select technology style companies. Now that we're getting some money flow into resources, that's what's kind of driving now the small caps index, and that pushed out really strongly this week. So that's a really good sign, not only for resources but also just for broadening in the participation in the Aussie market. So that's really interesting and something to watch for the week ahead. So some of our key ideas are still in that resources space, and it's a sign, because the resources haven't done a whole lot for quite some time now. So here, just look at MVR on the longer term chart. It's pretty much just been in that downtrend, but finally, this is where we've got that first indication that we've got a base, and we're kind of in that right environment where this could really get going. And certainly, it looks like a lot of resources are underpriced, considering the demand that's going to come through for some of these themes like AI, electrification and that type of thing, robotics and whatnot. So that's going to be a really interesting space, and that's a really positive sign for the Aussie market. The other thing I wanted to touch on, and why it's going to be a really big week, and I'll be watching very closely for Asia and China, Hong Kong, and Asia tech. So let's just cover off quickly. Here you got the Hang Seng index. So this is the Hong Kong market, and you can see pretty much we've been talking about this the last few weeks, just setting up perfectly. Pushed out here, then obviously we had that little bit of correction in the US. This has come back then to the 50-day moving average, found support, and just started creeping up a little bit. It's kind of stuck just here, so there's a bit of indecision. And the reason for that, I think, is that we do have a lot of big reports coming, a bit of companies reporting earnings in the next couple of weeks. And in particular this week, we've got Alibaba. So that's just on here on TradingView. It's saying looking for a report on Thursday. So that's going to be really interesting. Alibaba, once a really key leader in global markets, just in terms of tech, and it's almost like got so many different parts to its business. But it's just been in the doldrums with the Chinese and Hong Kong market. But back here, if you have a look on the weekly chart, that's where you have the China stimulus announcement. Alibaba was a real leader back when that was occurring. Since settled in here on the weekly chart, hasn't done a whole lot. It's right at that point, if we drew a line here, it's pretty much just got out of that trend line, come back so this is where it started to get out of this trend line again, this downtrend line, got out, come back and retested it. Now it's just at that point, and looks like it's really waiting for earnings. So that's going to be really key this week, I think, and could be a big mover for markets. And it's not only Alibaba that's going to be reporting this week, it's also Tencent. And Tencent, is obviously just massive, operates WeChat and so many other different investments in, so many different spaces in technology and gaming and whatnot in China and also Asia and the rest of the world as well. But Tencent's actually started to look really quite constructive and a lot stronger than Alibaba. So if you have a look just in that downtrend line that we kind of had for Alibaba, you can see that Tencent's already kind of started moving out at a similar time, but it's kind of still got that strength. So I think that was on the back of some kind of AI related news, and obviously Tencent and Alibaba are huge, and they've also got a lot of AI investments, which is a really key theme globally at the moment. So they're down to report on. Sorry, I'll just get rid of that. They're down to report on. Sorry, try and pull this up. They're down to report on Tuesday, I think it is. It's not working at the moment. Yeah, sorry, Wednesday. So they're down to report on Wednesday. So that could be a real market mover as well. So that's something to keep a really close eye on. And Tencent, as I said, has already been showing quite a lot of strength. And so this is where the stimulus was announced. So it's pretty much back to the point where that stimulus was announced. You have that correction, China stimulus here. It's kind of back up to those highs. So that's really interesting, and no one's kind of talking about that at the moment. Obviously, what we've been watching for a long time has been, and a way to play this has been kind of Asia ETF in Australia. And you can see that's also kind of certainly like kind of tracking that Hong Kong market, but just at that point of kind of indecision. And I think that indecision is based on what's going to happen with these earnings. So I think it'll be a really big week for Asia, and certainly be watching that really closely. Also, you've got China. So this is the Chinese market, actually done less than what the Hong Kong market has been doing. But there's your China stimulus settled back in. It's kind of set this base, but just look at this on the daily. Obviously sold off last week with kind of markets, found support at the 50-day, and just starting to creep up as well. So that's going to be really interesting. But what I also find interesting is CNU, which looks like which is one way to play the China theme in Australia, but it's clearly leading the Chinese market out at the moment. So there, if you look on the weekly chart, very similar. There's your China stimulus, there's your correction and retest, and just in the last few weeks, it's been moving out quite nicely, just creeping higher. So it's kind of like it's domestic Chinese stocks, but it's like new industries and new technology. That's the kind of stocks that it holds. So that's really interesting as well. and something that we have been talking about to subscribers as a key way to play kind of that China theme. And if that does really get going, could be really interesting. Just also quickly want to touch on just his Europe not doing a whole lot. It's kind of been it was a big performer out of that tariff correction. Now it's kind of been in this big base. It was really quite weak last week when everything was selling off, but it's kind of crept up this week. But what's the catalyst for the European market at the moment? Probably not a whole lot. And as I said, we're a bit worried about the US market. So if that corrects, whether Europe will also correct with it. And also, just want to touch on quickly on Japan. So Japan also has kind of been a little bit like Europe. It's kind of been stuck, not doing a whole lot. It's been a few little pops, but here was kind of the US tariff agreement, so US-Japan agreement on tariffs. And then, so that's where you got that pop, kind of got sold into, but then to finish the week, it was actually quite strong. So you've got to remember the Japanese market has a lot of tech stocks, a lot of kind of robotics and AI exposure, gaming exposure as well, gaming and esports. So it's actually quite interesting to see the Japan market kind of back near these highs, where it was, in July last year, before their kind of that was their currency issues. So they're kind of back up to there on the weekly charts. Really quite interesting. It'd be good to have Japan back as an investment option. As I said, they've got some really key companies involved in some of the key sectors going forward. So that's probably the key things I wanted to touch on. I'll also just touch on huge performer the last few weeks, and obviously did really well last week as well was Ethereum, and that's kind of just been creeping higher. So that's an interesting sign, and usually an indication that people are still happy to take a bit of risk at the moment. So there's Ethereum. Bitcoin's kind of lagging at the moment, but looking a bit better. That's just the trading today as well. So it's actually creeping a little bit higher. So they're probably another two things that you want to keep an eye on this week, the week ahead. So as I said, it's going to be an interesting market. Just to recap, keep a close eye on the US market. If we start to see further deterioration in participation as things get thinner and thinner, and it's basically, as I said, it could just be the Mag 7 stocks holding up the US market. We've got to be quite cautious of that. And there are some indications that under the surface, things are certainly not looking as good as what the index is showing. The other thing, we'll be watching resources really closely this week and see if they can continue to push out, and that's certainly a good indication for the Aussie the Aussie market. And be flow-on effects for resources, and kind of just the buoyancy of the Aussie market altogether, and also that small cap side of the Aussie market starting to participate as well. And then also Asia. Let's wait. Wednesday we've got Tencent, Thursday we've got Alibaba reporting. It'll be really interesting to see how they respond to that report, and whether that'll be the catalyst to push Asia out this week in the Hong Kong market. And it'll be good to have that side of things back as well, in terms of being an investable market again. So should be a big week for Aussie investors, and in particular ETF investors, just because what we can access, it's not just about resources in Australia. We're also looking at what's happening in the US and also Asia, and the best way to play these ideas is through ETFs. So once again, thanks for your time. And as I said, if you've got any comments, feedback, feel free to drop them in the show notes, and I'll certainly read them. So until next week, happy investing.